All right, all right, all right. What do we got going on? Let me just check my mic. All right, cool. Initially I had it off. So, all right. It's September, baby, and we getting it started at the beginning of the month. So we're gonna do a month wrap up. But first, do me a favor: subscribe, hit the bell, hit the like. That goes a long a long way. There are some links in the description if you want to support the channel. It's greatly appreciated. Helps me grow and put more value into the channel. Um, and check me out at 9 o'clock today. Um, I'm trading live. We're making money and having a good time actually chatting with some of the folks who've been hanging out with me for over a year now. And tomorrow is non-farm payroll, and that's a big day. And tomorrow I'm going to actually start at 8:30 and take that non-farm payroll trade, right? This is a trade that everybody should know. Um, it's just something you look forward to towards the month. When it triggers, it's fairly accurate, probably an 80% return rate, which is a nice return rate. And not that it returns 80% on your money, but it's 80% accurate. And I mean, if you follow me, it's all about probabilities and risk reward. So it's a good trade to get to know. So hop in with me tomorrow at about 8:30, and we'll talk about it and we'll get it going. So today, let's get to the present. We got challenger job cuts and initial jobless claims. I'd say those are the two of the big market movers of the day. Everything else has value, and people are going to drill into it. But initial jobless claims and the job cuts people are going to be looking at. Then you got some manufacturing. And tomorrow's the big non-farm payroll day again. Like I said, at 8:30, I'm going to try to be up and running by 8:30 and walk you through that trade. And we'll take that trade together and maybe put a few bucks in our pocket. We did really, really well yesterday. It was a nice day yesterday, early in the morning, man. I think, I think if you did just 3 contracts, within 6 minutes of the market open, we walked away with about 1150. So, if I mean, obviously, if you're doing more contracts, you could multiply that. But so far, since we started streaming, we've done very, very well. I think we had one shitty day on Monday where we made about 150 on 3 contracts. And if you don't know what I'm saying, then join me live and ask the question, and I'll explain to you how I trade in units of 3. So, like if you did 30 contracts, you break it up into 10, 10, and 10 and take progressive profits. So, yeah, that's my spiel, man. Let's take a quick look at the markets. It's actually an interesting day because we're looking at things on the monthly. So I like to start off with the energies, and I'm just going to keep order here. And by the way, I've been looking at LP or Nat Gas, and just because it's relative to LP, and so everybody kind of understands what they're going to get into for the winter. And the monthly charts look pretty bullish. Yeah, we're in a descending slope or a descending pennant, and it looks like we're going to break to the upside. Um, so, yo, fill those tanks, baby. I think it's going to be a warm winter, but nonetheless, fill the tanks. You know that the Republicans are going to exploit that, right? I mean, the energy industry is mostly Republican based, and they're going to exploit that shit. So get it in there, get it in the tanks, because I don't think it's getting any cheaper. All right, so I'm looking at oil. I'm neutral on oil right now. I'm watching this support right here. There's really nothing on the weeklies. On the monthlies rather. I'd be neutral on the monthlies. I'm neutral with a bearish bias, neutral to bearish, I guess I'd say. Breaking the support right here, really strong support, man. I mean, I'm gonna watch that. If it breaks, it's gonna tank, but could very well get rejected. Very strong. Look at that. 1, 2, 3, 4, 5. I mean, 5 times we've tested that biatch and haven't been able to break through it. So if we do, that's it. It just exhausted those bulls, and down we go. But good chance it's going to bounce off of that. And based on the fundamentals, what's going on in the world, I mean, the probabilities lay in that direction. Looking at gold, gold, really, yeah, nothing going on gold. There are really no setups in it or anything. So I'm staying neutral or bearish on gold. I'm really just staying away. It's just not doing it for me. It's grinding down, it's grinding up. It's really not presenting any entry opportunities for me. Here's the monthly on bonds. I can't get the continuous contracts on this, so the charts look like shit. I got to call these people and find out what's up with that, why they don't do it. Most places, you put in a certain symbol and they combine the contracts and you could chart them nicely. I'm sure they do it. I just don't know what the symbol is. So we could argue that this is a monthly bear flag. It's hard to see, again, because of the nature of the chart, but we could argue it's a monthly bear flag. And on the shorter term, on the weeklies, we can argue a neutral to bearish position. I'm looking for a pivot, maybe be able to put a trend line in. Right now, you just got to look at it as a channel. Maybe you could trend it off of here. I like to see something a little more obvious, but you could trend it off of here what you want, but you might as well just hold the high right there. So I'm neutral on bonds, neutral to bearish. And you're going to lean bearish because the Feds are raising interest rates, Feds raise interest rates, bonds go down. So, but it seems like it's all getting offset with the auctions and what they're selling the bonds at the auctions and the volume that they're putting out. So it's interesting, very interesting. It doesn't seem like they're able to force that interest rate up as aggressively as they wanted to. So yeah, where are we? That's bonds. Okay, then okay, let's take a look at BTC. Oh, I'm grabbing the wrong mouse. BTC. Yeah, I'm neutral pending break of this. I mean, I don't really like that line, this trend line right here, to put that in. So I'm just going to call it a channel. Again, hold the high, hold the low. And I'm neutral pending a break of any of these channels. I'm feeling 18,000. What's that low right there? That's 19.5. That's not bad. I mean, another... Yeah. I mean, we break, it's only 300 points off of that to the 19.5. I don't know if there's any great trade there, but I like that it keeps consolidating like this. It's maturing, man. That's how I'm looking at it. It's maturing as a trading vehicle. And I think once risk comes back on the market, it's going to be a good trading vehicle. Might take a little time, especially with the sensationalism that goes on. Yeah, BTC. All right, we got to move on to ES. We're looking at the S&P futures on the monthly. We could call this a tombstone. It's not traditional. It looks bearish. It's, and you're going to have that bearish bias again because we know the Fed's a hammer in the market, and we got Russia out there. We got inflation, all these fundamental bullshit. But again, I believe in our economy, barring any third world war. I think everything's going to be all right. So I'm buying dips. I like the 96 bottom. There's a lot of talk now. I mean, does 96 hold? Do we go the other way? It looks like everybody's kind of comfortable right here, as long as shit doesn't blow up. And then, you always have the people out there screaming, we're falling apart, we're falling apart, we're falling apart. And if this catalyst doesn't make the economy fall apart and the market fall apart, they're going to continue to scream, we're falling apart, we're falling apart, we're falling apart. It's inevitable that someday, maybe even in 5 or 10 years, the market falls apart. And then they're going to go, see, I told you. And I've been watching that, time and time again. And that's how, everybody makes their name. Even the ARK, the ETF ARK, the names elude me right now. Part of my pathology, dyslexia. Like, shit just pops out of my head. I mean, there are times I forget how to spell egg. Anyway, Kathy. Can't think of her last name now. So anyway, ARK. She was screaming tech. Yeah, when tech was ripping, she made a big name. Boom, she's blown up. There was another one, Elaine Gazzarelli, back in the day. Gazzarelli. She made some call. I think it was a tech pop or something like that. And she made a big name for herself. You don't hear shit from her now because, yeah, I mean, she was screaming the same thing for God knows how long. Like tech was ripping. I think she was screaming, it's going to pop, it's going to pop, it's going to pop. And I mean, for like 4, 5, 6 years, she missed, yeah, thousands, hundreds of thousands of dollars, millions of dollars of moves for her fund. Yeah, um, everybody's making money hand over fist until, like 5, 6, 7, 8 years later, and then tech pops and she goes, see, and she made a name for herself. So anyway, that's how it works. So you get all these naysayers, but what you do is look around, man, because you see it first, right? You're going to feel it in your wallet. You're going to see it in the environment. You're going to feel it in the mood. You're going to say, yo, shit's not right. Right now, it seems like prices are easing up. I don't think they're getting cheaper, but I'm not walking in the store and like, yo, what the fuck? I just paid $6 for this. Now I'm paying $8 for this. I mean, that's been going on all summer. It's kind of like, yo, it's still at $6. Hey, that's a step in the right direction, you ask me. I mean, I'm waiting for the day I say, yo, it's $5.90. But, I'm feeling that. They're talking about bringing manufacturing back onto the shores. And some places are beginning to do that. They're finding alternatives to get around the supply demand issues. They realize they can't manufacture in Asia or buy goods from Russia. They have to go to friendly countries, underdeveloped countries, develop those countries. People are realizing that. So I think we're on the path in the right direction. I mean, the language about China is now getting a little more aggressive, understanding that we can't count on, which is ridiculous. I mean, like the layperson knows that, we're funding a communist regime and we're buying the bullets that are going to be fired at us. But, the business, the corporations and the politicians are still sucking a little Chinese dick and looking for favors and want to do business in their economy where it's done. It's a wrap. I mean, they've locked down. They've removed their freedom. Everything that they moved towards over the past 30 years, this last clown has wrapped up or restricted. So, wake up, America. Time to produce online. And I know my language is dirty, but that's just the head I've been in. So anyway, I digress again. So that's it, man. That's what I'm looking at for ES. Buy the dips. Yeah, we got some pain coming. I think, through September into October, but I think around Christmas we're going to see. We're going to be in the midst of a nice little turnaround. This is what I feel. The economy is going to slow down, and we're going to stay around here. But I think the stock market is going to start moving up. And the reason why we're going to have a little slowdown in spending, which I've told you time and time again, is the destruction of wealth in real estate, and that's where the majority of the people get their disposable income. There are a few that invest in the market, but the majority of middle class, upper middle class America spend from their home equity. And that's what they're hitting right now. So the short-term effect is the slam in the market, but the longer-term effect is the destruction of wealth from the home real estate market. And we haven't even seen the effects of that yet in the economy. So this is another reason why you're going to watch the Fed. And I know the Fed's talking tough right now, but they're talking tough right now so that the short-term effect doesn't get tripped up and just keeps us on the path. So they're going to talk tough right now, and then just based on the numbers and the data, they're going to do what's appropriate. And the talking heads on TV are going to say, oh, they pivot, or they waver. But no, they react, they respond, and I think they're doing a very good job. So, all right. I don't know if this is really well, I guess it's a morning market meeting. Not much of a breakdown, more of a rant, but I enjoy my rants. A celebration of Dave. Okay, so we're looking at Amazon Daily, looking kind of bullish. Looks like it's going to move down. Let's take a look at what the monthly is. Well, you know what? Let's progress. Here's the weekly, making a lower high. I'm sorry. Yeah, you got to watch this. This is unfortunate. You know what? I would like to see it not extend past here. We're going to have to look for a higher low. That's what we're going to have to look for. See if it does that. Right now, there's nothing indicating that it's going to do that. and you get this tombstone again on the monthly. So breaking this, that might be another move down. Are we going to see that bottom again? I'm thinking not. I'm thinking not. So on the monthly, so here's a low, here's the high. This could be a higher low, you know, even if we push down a little bit and then take up, this could be a higher low. This could, I mean, we haven't even hit a downtrend in the monthly, to tell you the gosh darn truth. You know, long term, we're still in an uptrend. I mean, that would be unfortunate. If we hit a downtrend in that monthly, then we got at least another 18 months of sell-off. I mean, it's Amazon, so that's hard to say. I mean, that would be more obvious in the markets than in a particular stock, that long-term expectation. So taking a quick look at Apple. Let's look at Apple on the weekly. Oof, that hurts. That hurts. It hurts. All right, I'd run a trend line over here. I'd watch for to test a low, probably about 152, and then look for a retrace. And you could argue. Nah, I wouldn't argue it. Inverted head and shoulders. I'd want to see more of a down move. But here you got a downtrend. You know, you got the low, you got a lower high, lower low, lower high. Let's see what this does. I think it might slip into consolidation. This might be the channel that we grind around in for the next 18 months. That would be nice too. I wouldn't mind the volatility leave and we grind around in a channel. It's going to be an interesting year, man. You know, you have the Fed acting. You've got midterm elections. You know, we're coming into the new election. So you got, I guess, the primaries, the Goog. So it's going to be an interesting year. It could be a year of volatility, but you could have people talking up the market for political gain. So, you know, I think volatility plus support equals contraction, not consolidation. But this is one man's view. I don't see anything on Google. We look like, well, I could call this a reverse microtrend right in here, which is always a very, very good setup, a very exciting setup, one of my favorite setups. And just so that and head and shoulders. I mean, it's just so easy to get the targets on them and everything. And if you join me live at 9 o'clock, and when you do that, subscribe, hit the bell, hit the like, I will explain how you can figure out your targets and things like that. But here's my reverse micro trend. And I'd say that's a pretty good number. I'm gonna watch this on the weeklies for the Goog. And let's take a quick look at the monthlies on the Goog. Oh, look at that, man. It looks like, well, we had a flag, a cheesy flag. And then it triggered and it rejected and went into a consolidation. I don't know. Momentum's still down on the monthly. I mean, I would just watch a break for the break of the low of this pivot low. And we'll probably, we may even see 85. We'll see what the catalysts are. You know, this is what we're watching, right? So we're not taking that position right now with a goal of 85 because nothing's triggered. It hasn't turned bullish. It could turn around, go the other way. But yeah, you know, we're just looking for the setups. Like, okay, if this does this, if P, then Q. So first we got to wait for them to P, and then we can go Q. Let's look at Microsoft and then Tesla, shall we? MSFT on the daily, looking bullish, no setups. And we swing over to the weekly, and we're looking bullish, no setups. Looks like it could be a trend reversal, though. I like the way the momentum is pushing up a little bit. We got to see. We got to see if we can make a higher low, right? Here's a low, make a higher low. So here's our downtrend, right? And we still have a lower high, but the momentum's pushing up, which gives us a possibility for a lower low. That's a beautiful trend reversal. So what you would do aggressively, you could take the next bar up, right? If you wanted to take an aggressive. So if today's bar broke yesterday's high, that's your entry right there. Conservatively, you wait until it breaks the high. You expect it to make a new high. You miss out on this move, but it's more confirming. And boom, away you go. And then you can put your trend line in here. This is a little aggressive. I'm not too crazy about this trend right here. So that's the weekly. So I'm neutral on the weekly and just watching what it's going to do. Take a look at the monthly. The momentum, oi, that baby's pushing down. I mean, you could watch it break the low. There's really nothing to get into. Some people would argue that this is a tombstone. Others would call it a shooting star. Doesn't fit the characteristics of a shooting star. A shooting star should have a gap and a small body. A tombstone really should be at the top of a run. This is really a topping tail, but it's still a very negative bar. And breaking this low, you could push down and test these lows right here. Not enough movement for me to take the risk because my stop would go up here. So I'm talking 97 to 57. I got 40 points there. Yeah, you know, I mean, on 1,000 shares, I'm talking about 40 G's I'm risking for a profit, or at least a one-off of 20. So it's going the wrong way. You know, oh, look at that. Just got my first tick of the month. Look at that. And it broke the low. It heard me. Yo, somebody's watching this. Somebody made that trade. Like, all right, fuck it. We're gonna break the low, push it down, take that $40,000 risk. All right, so let's have a quick look at Tesla, shall we? And then I could come up with some more babble. It's early in the morning. It's probably about 5:30 right now. Watching the sun come up as I do this. Nice orange sky. It's like a blue sky with an orange horizon. Really pretty. And the orange is breaking through the treetops of the highest tree. So I'm on a mountain, so the trees slope up. So it's nice. It kind of stages like an auditorium, the trees. And when the light shines, you could see it come through the treetops. Or when it lightens, it comes through the treetops. Really pretty. Really, really pretty. All right, but let's get out of that spiritual head and back into the master universe mind. All right, so we're looking at Tesla on the weekly. It's just in a consolidation. Well, I guess it's trending down. Can't even argue consolidation, but I'm not yeah, I see nothing. There's nothing here that excites me. It just feels as though it's going to consolidate. I can't really argue that it's in a consolidation, but it doesn't feel very aggressive to the downside. So it just feels like it's going to make a higher low and then maybe make a higher high, but not exceed these highs, not break the highs, you know? So, I mean, really, it's in consolidation as long as it's below this and above that. And I think that's what it's going to do. It's quite a range. I mean, 200-point range. I think it's going to grind its way around a little bit. And maybe we could find an uptrend within that. Yeah, I don't see anything. I mean, I like that it's split, and I think it opens up. Okay, so this is a little more interesting. So, yeah, this is catching my attention. And that's how your setup should be. They should catch your attention. You shouldn't be looking for them. Right? Look at that. I just trended those two lines, and it came very, very close to here, respectfully close. Let's close this and get across here. So, you know, you see like these look like two shoulders that are lining up nicely. You've got a trend line with a higher high. And if you look at the momentum, you have a high here on the Mac Daddy on one of the shoulders. You got another high right here on one of the heads. And then you got a shoulder on the Mac Daddy rolling down. And you know, off of there. So you see the momentum dropping. The only way this setup would look even better is if this peak right here, which, yeah, you know, this is fucking nice. This is nice. If it was lower, it'd be even better. But the fact that these two peaks are equal and this peak is higher than, and that's correct, right? Yeah, boy. This peak is higher than this peak, but these two peaks are equal. That's a divergence inside a head and shoulders. Yeah, you know, I love it. I love it. And then if it was even lower than this peak, it would be even more enticing. So this is interesting right here, making that neckline. So a breakdown here, that could be, that I would watch that. That could be a really nice move, a really nice move. So probably, wow, man, maybe, My target would be... Look at all that action. Yeah, that's it. My target would be about 110 to 1.4 if this broke. Yeah, we're gonna have to watch that, man. I mean, but that's a monthly chart. It's going to take probably about 2 months of floating down. So I don't know if that Head and Shoulders will really kick, but if it does, that's going to be a mover. So anyway, yep, that's it, man. Subscribe, hit the bell, hit the like. I'm trading live at 9 o'clock. I'm making money. Come join me. Spread the word, and everybody, hey, good luck with your trades.